Thriving in a post NAR settlement real estate world, the conversations we should be having with buyers and lenders. The reason that I'm going to start with my background. You can see there I played basketball for Penn State. I was a captain my last 2 years. Please ignore the short shorts. I missed the baggy shorts by 3 seasons. I'm still in counseling about that. But the reason I had that picture in there is because I'm self-aware enough to know that I am a leader, which is different than a manager. I'm not about telling people what to do, about showing people what to do, and letting them take it as their own. And it also means I'm pretty competitive, which came in handy for me when I first got into the business over 20 years ago. I have my two fearless leaders there, Megan and Andre. I've been in the business 15 years when they came into my life. And for the first time, their whole thing was, um, how can we help you make money from your unique selling proposition, which is your address book? Over in the far right, I have my personal profile from Facebook, and it shows I have 5,000 friends. That happened in 2015, and it wasn't anything intentional. But that is what I know is my unique selling proposition. It's bringing people together, whether it's B2B, whether it's personal to business, what have you. So Megan and Andre have been instrumental in helping me set up what I consider to be the best mortgage advisor scenario that I could ask for. And then the guy next to me on the left is Brian. He is my new partner in crime and our new endeavor, which I'll get to at the end of the webinar. But yeah, I've been in the business 20 years. I've been all three derivations. I've been a banker, correspondent, lender, broker, being correspondent the most. But the broker, I've been 6 years. The first 2 years, it wasn't the best experience, and in all fairness, is because we were a new broker shop and we weren't getting any love from our wholesale lenders, and our A paper loans weren't closing. So I was a little leery when Megan and Andre started recruiting me, and they showed me, and by that time, technology had caught up, and they had been in the business a long time and established brokerages. So my loans were closing very easily, very flawlessly. So they know what the heck they're doing. So I wanted to discuss this NAR settlement. Nothing gets more clickbait or more eyeballs than bad news and gloom and doom. But for me, it's important that we don't see this as a disruption, the settlement that's happening August 17th, that we see it as an opportunity to shine and show our worthiness to our buyers. So the idea here is to show you how I switched from just being a loan officer to being a mortgage advisor. I've been there. I know a lot of buyer agents are freaking out a little bit because they're going to have to come up with other ways to get paid if it plays out the way it seems. But right now, we really don't know exactly what's going to happen because there are companies that have settled and there's companies that haven't. So who knows how that's going to play out? I just know on my side, the lender side, that there's going to be three other scenarios possible that will compensate the buyer for their time and effort. And I think as a buyer, they're not going to make a move if there's uncertainty. So how do we show them exactly what's happening and show our worth at the same time without having to say I'm worth it? So I'm just going to show the mindset shift to separate you from your competition. And then I'm going to do the four possible scenarios when people say, "Hey, how can I afford to buy a home and pay my buyer agent?" And then I'm going to do two different case studies. One is first time home buyer. After having the information saying I'm just going to rent, and then the second case is like when they have closing cost pain or payment pain, and I call that the first time home buyer house hack. Let's get to my transition from loan officer to mortgage advisor. Now I have a photo there of Zach Edey for any of you who follow basketball. Zach played for Purdue. There he is, taking it to my Nittany Lions, to my broken heart. Zach Edey's 7'4". 7'4" does not grow on trees. Zach Edey was the two-time player of the year in the country in the Big Ten. He's a beast. Uh, and you get the ball into him when you need a bucket. He's either going to get the bucket, a foul, or both. I'm going to use the analogy, same as the fintech loan officers. They're big and plotting. They don't have a lot of flexibility. Nothing wrong with that. Those fintech guys like the Loan Depots and Quickens, those guys, they're transactional, but they do a lot of transactions because they're talking to a lot of people and they're churning. And so they do fine. But for me, because interest rates come from the same place, I wanted to separate myself out of that commodity of quoting rates and become a relational mortgage advisor. And I'm using Steph Curry. Because Steph Curry, he can shoot the three. He's got a great mid range, but he can also get to the bucket and get a hoop or a foul just like Zach Edey can, but he can also distribute. So he's a lot more flexible in getting you to a win than a Zach Edey would be. Just different taste. But I wanted to separate myself out of the quoting rates game because, when I started in this business, this was it. It was lending tree all the time. That's where I get all my leads. And it is the shark infested waters that they say it is. And I was getting my ass handed to me because I was quoting rates I thought I could deliver. And I was getting beat by half a point or more. And I couldn't figure out what the heck was going on. But there's, legal loopholes to how you quote the rates. They were just trying to get people on the phone and then use these legal loopholes to win them over. And so I'm just sending out fee worksheets and anguishing because I'm not winning loans. And I thought, well, I'm getting into business in my late 30s. I don't want to reinvent the wheel. Let me start following the people who are killing it that do what I do and not reinvent the wheel. So number one, I wanted to improve my conversion and move from giving prices, meaning rates and closing costs, to giving advice and move from selling a loan. I used to say I sell dreams. Now I say I facilitate dreams and generating wealth. Just words matter. Selling loans, kind of boring. I mean, again, it's effective for those fintech loan officers who they're doing fine for themselves, but because you can tell from my Facebook profile, I'm a people person and I want a long-term relationship. So I want to go deeper and I want to be helping my clients generate wealth, and that's what I tell them. And I also want to, because I'm a connector, I want to be facilitating ancillary services. Whether it's the title company, whether it's a general contractor, realtors. I want to be kind of a one-stop shop, even though I don't have ownership of all those different entities. Once I have a consultation with them, I think I develop enough trust where they will listen to what I say. And so what does that look like for a realtor? Same thing, just, improve your conversion rate, um, move from realtor to real estate advisor. And that's the difference between selling homes and helping someone generate wealth. And then same thing, facilitating ancillary services. When you're a realtor, you have all these connections that you can connect your clients to and show your worth without necessarily having to come out and talk about it. And again, these conversations are conversations I want you to be having with your lenders, your preferred lenders, if you're a realtor. I come from a position of abundance, not scarcity. I can't do every loan, nor do I want to do every loan. And I think that I have a good list of realtors. I want to go deeper with them. I'm willing to listen to new realtors in the areas that I concentrate on. I mean, we're licensed in 10 states and Puerto Rico. I concentrate in Pennsylvania, Virginia, and Florida. So after watching this, if you want to have a conversation, I'm willing to take on a couple more. in those areas. I want to do the show and tell, the flip of that, to explain how you're going to separate yourself from your competition in this post NAR world. The first, the tell, you're going to go in a consultation with your buyer, and you're going to give them all this information about why they should work with you, why you're worth it. They may know these things, they may not. But if there's a something I'm missing out of this list, I'm all ears, and I can always add it. But telling them is what every buyer agent should be doing, is telling them what your unique skills and your unique selling proposition is. But you also want to show them what they don't know. And I think what happened with me is I was like, well, yeah, I can show you rates on the loan program and the closing costs, but everybody's different. Every loan is different. So you should be giving them choices so that they can make a educated decision based on having full information. So what I tell my realtors is, you know, even though the whole I use three lenders here, try this. That's not really a thing, but I know realtors do it, and I'm not going to fight that. I feel confident enough, having been in this business long enough, that if whoever I'm going up against, they're probably shooting out just rate sheets. So I just want my realtors to say, hey, yeah, look at other mortgage people, but I definitely want you to talk to Brian. He's low pressure, and he's going to give you options that you may not have thought of. And he also is really good at converting your biggest debt into your biggest asset. And once that conversation happens and it's handed off, then that's my opportunity to edify the realtor who sent me the borrower. And I'm going to start with that borrower who says, I don't have enough money to buy a house. How am I going to pay for my buyer agent too? Again, I'm going to show you a situation that actually happened. So there's four possible scenarios post NAR. The current scenario, which is the seller paying all 6% and the realtor splitting. The buyer gets 3, the seller agent gets 3. But the other 3 options are have it financed in the commission, have it financed in the price, have it paid in cash. The finance in the commission, meaning bumping up the loan amount for that borrower, building it into loans so their buyer agent can get paid. The finance in the price is very familiar to people, where you bump up the offer price from the listing price to cover that commission. And then the third one is just paid straight cash. So what did those scenarios look like? And this is what happened to me very recently. My realtor sent me a guy. The first thing I asked him was, what are you saying in your real estate office about the NAR settlement? And he talked about the uncertainty of it, and that there are definitely going to be some changes, but not knowing how it's going to shake out. And I said, well, you know, I agree. We don't know what's going to happen, but I know from my end, let me, number one, make that your guy that you're sending me feel good about using you and not even questioning that commission. And this is how I did it. When I called the buyer, I just said, hey, have you heard about this NAR settlement? And he said no. And I made sure I didn't say, did Mike tell you about it? I just said, hey, have you heard about this? Here's what's going to happen. You got to sign a contract before they show you a house. The seller may not necessarily pay the 3%. So I'm going to show you these options on how you can pay Mike, because Mike is worth every penny. Mike, you're going in to buy a house, but there's for every one of you, there's 10 other people that are just kicking tires, and time is money for realtors. And just because he sent you my way, I know that he cares about you and wants to have a long-term relationship. So let's go over these different scenarios. And so the first scenario, as I mentioned, is the current scenario, option 1, where the seller pays for the buyer's commission, the 3%. And I use the 340 loan amount, just a startup home in State College, Pennsylvania, loan amount 306. Down payment is 34,000 and the interest rate is 6.875 on a 30-year fixed. It's going to be the same for all of these. I also did a 10% down. Of course, everybody knows about the 20%, but they often don't know there's a zero, there's a 1% down, there's a 3% down, there's a 3.5% down, there's a 5% down. So I just kind of split the difference and did a 10% down, which is going to be incur mortgage insurance. And there's three different ways to do that, which I'm not going to get into. We're just going to do the monthly mortgage insurance and just look at the side by side comparison. So I think in the beginning, it's going to be the same. The seller paying the 3% to the buyer. Because when that happens, that opens up more potential buyers. If you're not going to be paying that buyer agent, what's the incentive for the buyer agent to show the house? So I think the majority of it will kind of be the same. But if not, there's option two, and that's where the buyer finances his buyer agent's commission is 3% into the loan, and you'll see the loan amount is a little bit more on 340. 3% is 10,200. So we just increased the loan amount by that 3%, which means they're putting only 7% down, and that's 23,800, and same interest rate. And then option three is financing it into the price. This is the one that people are familiar with. You go in over off the listing price and ask for seller assist. I think this is the sweet spot for listing and buying agents and for sellers and buyers, because the sellers don't care about what it sells for as much as they care about what they're going to net out. And then this financing into the price with the seller says they're going to net out what they want to net out, and the buyer's going to be able to pay his buyer agent their commission. The loan amount is going to go up a little bit to 350, 200. And they're going to be doing 10% down. So their down payment is 35,200. And so then the paid in cash, I have the wrong numbers. Yeah, 35.2. Okay, so paid in cash, that's just coming out of pocket. That's going to be your more seasoned home buyer. They've had many purchases of homes. They have a nice portfolio of money, and that 10,200 isn't going to kill them. They know that they have a good relationship with their buyer agent and want their buyer agent to be paid. So those are the three options. And then let's go a little deeper on that. Let me zoom out. And just look, I highlighted the mortgage insurance. They're all pretty much the same, except for when you finance it into the loan. It's $20 more, not a huge difference. The total monthly payment, I highlighted the lowest payment, which is the status quo, and also if they paid in cash. And then the highest is if you financed it into the loan, which makes sense because it's a higher loan amount, but it's only about $87 difference. So for that $87, I had this conversation with the buyer. Is that worth it for you to purchase this house? Of course, because you're buying a six-figure asset that's going to be appreciating 4 to 6% conservatively. So that appreciation is going to far outpace that extra $87. And the buyer agreed with me, had no pushback on doing it that way, didn't question, you know, how or why he was going to pay Mike. I just laid out the options. He chose the one that he liked. I highlighted total cash to close because they're all about 50,000, except for if you pay out of pocket, which is going to, of course, could be a little bit higher. But then let's go even deeper, and I just show my software, and it kind of breaks it all out, and it shows like the lowest monthly payment. As I mentioned, that's going to be the seller paying the commission or paying in cash. The lower total cash to close is going to be the same, because like on this option, the current scenario is because the seller's paying that 10,200, and the finance commissions because it's built into the loan amount, so you're bringing less cash to the table. And then the lowest cost of the loan is going to be the first option, which is the current scenario. And that's comparing all four possible scenarios. But, like, let's look at the worst case, and all of a sudden, not one listing agent or one seller is going to be paying that commission. What do the three options look like side by side? So that's this slide here. And you'll see option three, paid in cash, is going to be the lowest monthly payment because you're paying in cash, and you have that low loan amount. And then the lowest total cash to close is going to be option one, which is financing it in the commission. That's building it into the loan because you're not bringing as much to the table. And then the lowest cost of the loan over 30 years is going to be option two, which is the building it into the sale price. Again, I think that's a sweet spot with the seller and the buyer. Now, you may say, all right, well, what if we bump up the sale price and it doesn't appraise? Well, there's an appraisal gap strategy that can be used if the buyer really wants that house. I'm not going to get into it now. It's on my YouTube channel. You can check out that video in there on the appraisal gap strategy. So that's the side by side comparison. Now, again, this conversation with that buyer allowed me to have a conversation that may be uncomfortable, especially for a newer agent to have about how they're a buyer agent about how they're going to get paid in this post NAR settlement world. Have this conversation with your lender. Maybe they can build something like this for you, or you can reach out to me and I'll do it for you. So let's do this other scenario where these are the first of the two case studies. After explaining this, somebody says, "Well, I'm going to just keep renting." Well, you want to have that generating wealth conversation and do what was called the rent to own analysis for them. So what I did was I just Googled the one bedroom apartment in State College. You see it's 1261 a month. So the scenario is I rounded up 1,300 a month with $20 renter's insurance. And $348,000 sale price, which is what we've been using, you can get a 3-bed and 3-bath single family residence. So this is what it looks like. The rent is $1,320 with that renter's insurance. The monthly payment on a purchase, if you do the first-time home buyers are going to lean towards building the commission into their loan amount. And so here's the 22,619 is the payment. But because you're owning a house, there's going to be a tax benefit and there's going to be some principal paid down. So the net monthly is 2127. Now, for someone who hasn't owned a home, they're going to see this $807 difference, and it's going to freak them out a little bit. And understandably, I get that. And there also may be an issue with the 50,000, but I want to show them what the difference in owning is. So I just show them the tax benefit, and I only use a 5-year snapshot because it's just, no one's a fortune teller. So 5 years seems like a nice short-term snapshot to see what it's going to look like. And that tax benefit that's a fairly big number for someone to look at it as a first-time home buyer and say, "Oh, yeah, I really didn't think about this tax benefit, but that's definitely something." But there's more to it. Let's talk about net worth, and I'll ask them, what is your net worth going to be for buying right now as opposed to just continuing to rent? And so after 5 years, here's the difference. That's 6 figures that jumps out at them. You don't have to beat them over the head with it and stress it. They just see that number and they go, wow, that's what the borrower did. He said, my goodness, that makes a heck of a lot of sense to just keep, to move into a home and, stop paying someone else's mortgage. The second case study I want to go through is, I'd mentioned that the closing costs are $50,000. Well, for a first-time home buyer, maybe that's all they have, and they're closing cost sensitive. So how do you answer that pushback? And I call it the house hack. And here's what it looks like. It's the same borrower, but let's say that borrower's 30 years old. They've, been living with 1 or 2 or 3 roommates, and they really want to buy a house. I'll tell them, say, hey, look, somebody that you live with, you like, one or the two of them, why not buy this house and rent two rooms out at $900 a month? Now I can play around with these numbers, but I'm just going to use 900 a month. So that's 1,800 a month that this person would be getting in rent and buying the house. So now that monthly payment isn't as hard to swallow. In fact, it's quite easy, and especially when you see the numbers. So I just added another column here, and I said I had them do 5% down instead of the 7 or 10%, and so it's only $17,000 down. Obviously, the payment is going to be higher, but because they're getting $1,800 a month, number one, they're going to be coming to the table with $17,000 less. And if they took that $1,800 a month and just put it towards principal, the house would be paid off in just over 9 years. So, you got to think outside the box. You just don't want to be quoting rates. I don't want to be quoting rates and fees. I want to solve problems. I want to help this borrower generate wealth. By my realtor sending borrowers to me, I'm helping them generate wealth, number one, or convince them that it's worth generating that wealth. Number two, I'm showing them that working with me, because I'm a broker, I can shop the rates. We don't even have to worry about the rate conversation. I actually even show them what the rates are. And then because I've edified you and you've sent them my way, now you look like totally different than any other buyer agent that's out there trying to win someone's business and convince that buyer that you're worth that 3% commission. And you don't have to explicitly say it. You just show them, and let's see what the tax benefit is after 5 years. Yeah, it's not as great as if they owned it alone, but it sure is better than renting, right? And then if we look at the net worth, well, heck, that house hack thing sounds like a pretty damn good idea. So, when people are thinking or saying, I'm just not sure whether to buy now, or I'm waiting for the price to go down, those kinds of things, buying now isn't a bad idea. I'm actually going to do another one showing the cost of waiting, another webinar. But this house hack is something that you should be thinking about when they say I'm still thinking about renting, or I don't think I can afford this as a first house. Uh, Either send them to me, or you have this conversation with your lender and have them do something like this. So once I've done this, like, what does that look like compared to a rate, a fee, and fee worksheet? Like, I just number one, I may get shopped once a year, if that, because this is not doing what all this is doing, right? So just by utilizing a lender that's going to show more than rates and fees, you're showing your worth. You are telling, you don't have to explicitly say it if you don't feel comfortable. Just like lead by example is what I say. So, the bank versus broker thing, this is the last part of it. They're the Zach Edey's, the Quickens, the Bank of America's, the Chases, they're losing market share because it's a different world now. Like, we have a lot of entrepreneurs out there, a lot of 1099 of people that they don't want to pay the tax man, so they're showing less income. So you need some outside the box programs. Well, those big box companies just aren't as agile like a Zach Edey. Again, I love Zach Edey. He's an NBA player making millions and millions, so he's good. But I'd much rather go with the Steph Currys, the guys that are agile, mobile, hostile. They can adjust to the market. They can offer different programs. They can shop the rates. That's what mortgage brokers are doing, and that's why I love being a mortgage broker. And we want to not only be able to win more market share, but we want to help realtors win more market share. So what Megan and Brian, my new sidekick in this venture, Megan has essentially enlisted us to help the entrepreneurial type loan officer and the realtor who wants to generate, have another revenue stream, do that with a broker in the box. And you're offering ancillary services. Yes, you can refer to a lender, or you can make money by having a broker in a box and having a mortgage franchise on the real estate side. Or if you're a loan officer and you think you can do better on your own, but just are intimidated by the process of getting licensed, getting compliance. What software do I use? What client management program am I using? Do they talk to you? All those things. Megan just started out helping loan officers realize the dream that she's realized. She owns her own mortgage company. She owns her own title company. She has real estate investments. So just like, and this is what attracted me to working with her is helping others realize their dream. And if you're a broker, you're not going to have to say no. You're going to have with another revenue stream, all that commission compression that's happening in the market and probably will continue to happen with this new NAR settlement. It's just something definitely to consider, and it's going to separate you from the competition if you say, "Hey, we have this in-house mortgage company, and we're a broker. We could do non-QM loans, non-Freddie Fannie loans that for self-employed and asset-based, so on and so forth." And so we just started doing this in January. No pressure. Just if you're curious about it, you can always follow the Code Lab Life on social media, Facebook. There's a YouTube channel. We've These are some of the entities that we've brought on board. As I mentioned, individual loan officers that's originating about $1 million a month. That makes sense for them if they feel like they can do better and they want to have a better commission split, and they go off on their own, but they are intimidated by that process. We help you do the broker in the box and build your own mortgage company. And then mortgaging, we have a guy that worked for a correspondent lender for many years, heavy hitter, putting up, I think he's $1 billion producer lifetime. And he wanted to do it on his own, but just didn't know, what's the best way. Megan has spent so much money trying all these different things and experimenting. And now that she's found a sweet spot, now it's scalable. So those correspondent lender, if you know someone who works for a correspondent lender and they have that entrepreneurial spirit, this may be something for them. And then realtors who have a team and they're producing. I don't want to confine it by how many sides you do a year, because you may be doing a lower number of sides, but you may have a relationship with a lender that's doing some big numbers, and you can make money off of that if you do the broker in the box. And then, of course, the broker owners who are producing 75 to 100 sides a year. As I mentioned, the commission compression, a broker owner may only make $300 to $500 per transaction in their office. But if you have a mortgage entity, that could be 2, 3, 4x on each transaction. So it makes a lot of sense. And, we'll talk to anybody who's interested. You can, reach out to any of us. But I would say as a start, just follow the CoLab Life on social media, because we're always putting out content on how this goes. And you can even join our mortgage mastermind on that. So the main thing for if you get nothing out of this is just share this with your buyers. November 7th, I'm sorry, August 17th, the NAR settlement goes into effect. We don't know how it's going to shake out, but at least you can take this video and school all your buyers, show it to your lenders and have them prepare something like I just showed you, where you see the 4 scenarios and let them decide what they think is going to be the best option for them. So when it comes time for them to go out and look at houses, they can have seen the different options and decide, and you can have that all settled before you have the contract signed. So yeah, share this. It's my Help Me BA YouTube, and this is my real estate playlist link. Really, all you have to do is just go to my YouTube channel, and it's YouTube at Help Me BA, and click real estate, and it'll be in there. And you can share that. Like I said, you can share it right now. There's some other content in there that you can be sharing. And I thank you for your time. And I'm always available. I don't have a wife or life, so you can call me before 9 a.m. and after 5 p.m. I am open 24 hours. That's it. Take care.